I'm coming home, baby, now. I'm coming home now right away. I'm coming home, baby, now. I'm sorry now I ever went away. Every night and day I go and stay. I'm coming home, baby.
Come on home.
Coming home, baby, now.
You know I'm waiting here for you.
I'm coming home now real soon.
You've been gone.
Coming home, baby, now.
You don't know what I'm going through.
I'm coming home, I know I'm overdue.
Since you went away.
Expect me any day now real soon. I'm coming home.
Come on home.
Coming home, baby, now.
You know I'm praying every night.
And everything is gonna be fine.
Please come on.
Coming home, baby, now.
I want to feel you hold me tight.
Expect to see me now anytime.
When I'm in.
Welcome to the Alpha Ag Summit. We want to thank you for attending on whatever platform you are streaming this program on. I'm Greg Akagi, Ag Director with WIBW Radio and the Kansas Agriculture Network in Topeka, Kansas. As we all know, the commodity markets went through several swings in 2020 and has continued its volatile ways starting in 2021. What will move the commodity prices and markets in 2021, and what will be the opportunities for farmers and ranchers to be profitable in 2021? These are a few of the topics that we'll discuss during our markets panel. Our panel discussion is brought to you by Grand River Welding Institute, an innovative learning center for any career-minded welding specialist. And it's also brought to you by Schultz Homes. Let's introduce our panel for today's program. We're going to be speaking with Tom Leffler, who is president of Leffler Commodities, LLC, which has offices in Augusta and Wichita, Kansas. He has been a commodity broker, ag marketing advisor, working with agriculture clients on risk management since 1991. Tom also does many broadcasts on local and national broadcast radio and TV stations. Prior to this, Tom was actively involved in a third-generation member of the family cattle and farming operation near Emporia, Kansas. Tom is married to Patty, who is also a major part of the business. They have 3 children and 7 grandchildren. So before we begin, we remind everyone that the views and opinions expressed on this summit are not those of Alpha Media and do not represent the viewpoints of Alpha Ag Network stations, their farm directors, or management. This broadcast is protected by copyright law, and credit should be given whenever sharing or reposting of this video. Tom Leffler of Leffler Commodities, we appreciate you joining us here on the Alpha Ag Summit.
Well, thank you, Greg, and I appreciate the opportunity to be part of it. You've done a fantastic job of giving an intro for me. The only thing I'm going to add to it is if people want to get a hold of us on the phone or they want to check us on the web, just use 866-GO-TO-TOM.
You know, we described well, there are many ways to describe 2020. Some of those we can't air, too, as a matter of fact. But as we look at it from the commodity market standpoint, I haven't had a chance, and you see these charts every day, and if you just look at price charts, I'm sure those swings we saw in 2020 towards the lower part, and as we headed towards 2021 towards the higher part, it's going to be an interesting study here for many, many years to come.
Oh, it most definitely will be, Greg, as we did see large swings when you look at a chart there. And the thing we got to look at is we won't forget this for a long time. As you said, we saw back in May of 2020, USDA reported the February 2021 to the February 2021 report, the corn ending stocks dropped from over 3.3 billion bushels and stock usage ratio at 22.4% to we dropped in February to only 1.5 billion bushels and a usage ratio of 10.3%. And that same time frame, our soybean ending stocks dropped from 405 million bushels and a ratio of 9.4% to only 120 million bushels and a ratio of 2.6%. When you look at those fundamentals, they pretty much tell you why we saw the large swings we did in our grain market from the lows in August to the highs that we have experienced this week. Now, it was also one of those years that reinforces those that believe in doing nothing as the best marketing plan as those that waited and waited, wanting to get a higher price for their commodities. is this just makes them feel that, sometimes not having a marketing plan is the best thing out there. And this year was one of those years where those are the people that came out ahead. But year in and year out, Greg, we all know that having a marketing plan is a lot better than hoping and praying that we're going to see higher prices like we did this year.
Yeah, and I want to get into that here as we talk about things that are going to be taking place. One thing we said, it was a volatile market, and the volatility has continued here as we've gone through 2 months basically of 2021. Throughout the rest of the trade year, do you expect that volatility to remain in the market?
Most definitely so, Greg. I don't think we're going to see it disappear anytime soon, especially as long as we have the managed money accounts holding these large net positions in our grain futures. They are going to be the ones that are going to help cause the volatility to take place, as we're going to see them buying on dips and selling and taking profits when the market goes up and make new highs. So that's going to be the one thing that's going to keep the volatility out there, along with the unknowns that we have as far as the fundamentals out there, because that's an ever-changing target, these fundamentals out there. And there's one more thing that's going to come up that I think is going to even increase volatility more. Starting March 15th, the CFTC has gave the CME group the okay to raise trading position limits for these large accounts. We're going to see the Chicago and Kansas City wheat go from 12,000 contracts to them going to be able to trade 19,300. Soybeans from 15,000 to 27,300, and corn from the present 33,000 up to 57,800. This will allow a lot more money flow into the market and into the pockets of the CME group.
That has the potential for prices to go this way, and probably just as much for prices to go this way too.
That is exactly right, and that's why I do not see this volatility going away anytime soon, Greg.
Tom Leffler of Leffler Commodities out of Augusta, Kansas, is joining us here on the market panel during the Alpha Ag Summit. Now, Tom, one would think with the grain prices that we've seen, and we'll start with the grain prices, there are opportunities to get things locked in for the 2021 crop. So it's a two-part question that we can expound on here. Are there opportunities out there right now? And at the same time, are there reasons why farmers shouldn't pull the trigger right now with regards to prices?
Well, Greg, I want to answer the second part first. For the majority of the producers that I've had a hard time to agree with about waiting and passing on these current price levels, especially if you've not priced a single bushel, I think you've got to respect and award this market, or I should say reward this market with some selling in there. Now, as far as the first price part of the question, yes, current price levels are great opportunities to lock in profitable price levels right now. This week, we have seen new contract highs made in our new crop December corn and our new crop November soybeans. Now, these are the highest prices these contracts have seen since back in May and June of 2014. That's almost 7 years ago. And yes, these markets could go higher. December corn could go to $5, $6. November beans, $12 to $14. But the other thing we know is they could also tumble lower down the road on who knows what kind of information or reasons behind it. Now, we also recommend using the cash market, futures, and options for price protection to protect this downside. Now, also recommend using sales in increments and be diversified in the different methods that you use. And you also got to be concerned about what happens, the possibility of more upside in this market. Well, use that more upside to do more pricing down the road, because you don't want to price everything at one time. And if you're pricing stuff and you're worried about missing out on more upside, you can always step in the market and buy a call option to give you the opportunity to capture some of that upside. Now, there's one more little thing that plays into this out here, and that is these higher prices are resulting in our revenue crop insurance base price coming on this month at very high levels. That will conclude at the end of February. That's when they conclude cash checking on the ending prices every day and averaging that out. Right now, we're looking at December corn sitting at about $4.57. The last time we was this high was back in 2014. November beans right now are sitting around $11.82. That's the highest they have been since 2013. So, Greg, it's really hard to argue there is not great opportunities being offered.
Let me ask right now, as you and I sit here, what do you consider the biggest driver in this market? There's a whole mess of things that I'm sure you could look at, but as you look at it, what do you think is that biggest driver?
Greg, I don't think you can give the blue ribbon to any one thing. It's several things that have done it. First of all, the old adage that the trend is your friend is currently a big driver in the markets right now. You cannot ignore that. And that old adage is very true. Now, it's also helping bringing buyers in the market, whether it's a large managed money or the small speculators playing in the market. Now, second, you've got the price bullish fundamentals because of the tight supplies, the strong demand, and the concerns we have over the weather and the crops in South America. Now, it's easy to find conflicting stories out there about South America and their weather and their crop conditions. It's kind of like listening to two politicians trying to figure out which one of them is lying the least to you. Well, that's making things even more confusing out there. And something that is changing is the flow of soybeans into the South American ports. And the beans out there are getting cheaper for China to purchase from South America. And our last USDA sale of soybeans to China was 132,000 metric tons back on January 29th. So we're seeing something there change where we're not the big supplier right now of beans to China. It's that time of the year that we are looking for that demand to switch. And we're hearing reports maybe by the first part of March, Mato Grosso in Brazil could be close to 80% harvested. That is the largest producing state in Brazil.
We got planting season coming up here, Tom. And by the way, we're talking with Tom Leffler of Leffler Commodities out of Augusta, Kansas. And he is a part of our market panel here on the Alpha Ag Summit. A simple way, if you have any questions for him, you can give him a call, 866-GO-TO-TOM. And Tom, as we look at planting season, of course, there's questions. I know many farmers have said, well, we know what we're going to plant, but you had USDA, what they're estimating, how much we're going to plant corn and soybean wise. It's going to be interesting what this planting season is going to entail.
It is, but one thing that never changes, Mother Nature has a lot to do with what takes place at the beginning of planting season. The weather is that one uncontrollable factor out there. Hopefully by spring planting, we have a much better clue what our corn and soybean production in South America is. And also by then we may know even what's going on with these large outstanding corn and soybean export sales we've made. Will they continue to be taken on, ships to their destination, or will they get canceled? That's going to be a big player in the market too. And everyone is also depending on a small prevent planting acreage to allow increases in the corn and soybean acres this year to help rebuild our stocks. Now, the USDA outlook form that came out last week is pegging the soybean acreage at 90 million acres. That's an increase over last year by 6.9 million, and also is near the record of 90.2 million that we made in 2017. That corn acreage is pegged at 92 million. That's an increase of just a million over last year, but the record is 97.3 million in 2012. The other thing we might see when planting starts, everybody thinks we're going to see so many more bean acres, but farmers have a tendency, if the weather's holding good, the ground's working good, they just keep on planting a little more corn than what they might think. So it will be interesting, as Mother Nature will probably have more control than anything, Greg.
I find what's interesting, and this is not a knock against farmers, the technology is so good and the farmers getting so good, even in drought years, we're still seeing not, record crops, but we're still seeing great crops on what they have been able to produce.
Well, you're exactly right, Greg. And that's one thing that to some extent has messed up some of the estimating on how good of a crop we have coming during the season, because you look at the weather, it wasn't very conducive to the plants. And even some of the farmers, I think, are getting still surprised because we got so used to what the weather does to us, and we've overcome a lot of that. Our seed genetics have improved tremendously, and it's a lot harder to have a total disaster than what it used to be.
We've talked about corn, we've talked about soybeans. It's been fun to say sometimes during these price rallies, we've seen wheat drive the market. It's pretty interesting to say that. And that's not even the one that's one of the bigger drivers. We haven't even talked about sorghum yet.
That's right, Greg. Milo has been the one that came out of left field and surprised everybody. It's got a lot of attention as we've been trading for some time now, about $1.50 higher than the corn prices in the old crop, And even new crop bids are running at least $1 over the price of corn, something that is virtually unheard of. But the reason why, China's been a big importer of U.S. milo. And it looks like right now they have purchased about, or not just China, but exports period, have amounted to about 80% of what the USDA expected for export projections for the marketing year. And there's still 6 months left in the marketing year. So these milo stocks are going to get tighter and tighter. The last time this happened, the strength did not carry over into the next growing season, but this time it looks different as we're still holding those prices here in this time period. And I would take advantage of forward pricing part of your milo production, especially if you're shifting a lot of acres to milo from something else. I have clients that have already indicated they're going to see more of their dryland corn acres go to milo due to the high price of milo, due to the lower input costs, and due to being more dependable yields if we have a dry growing season.
Of course, where you're at, Tom, we're in the middle of hard red winter wheat country. But for our friends up in the northern plains, you're looking at spring wheat as well. Have we seen rallies pretty much, I guess, in concert with both hard wheat and spring wheat? And then, of course, we've got planting season coming up for spring wheat coming up soon as well. Once again, is it going to be interesting to watch what this wheat market will do as we get towards harvest for the hard red winter crop, and of course we get the spring crop in the ground?
Yes, Greg, the wheat market's going to continue to be interesting. We have seen overall the wheat market's benefit to the upside by the help of the corn market and the off and on news that we continue to see out of Russia. Russia seems to sometimes has more influence on our wheat market than things going on right here in the U.S. Now, wheat does not have tight supplies and as great of demand as we've seen in the corn and the soybeans, but that has not stopped them from going up at high price levels also. Now, although China is importing a lot more wheat this year than normal, which nobody's really sure why, China owns about 50% of the world wheat stocks. That's something to kind of keep in the back of your mind. Now, currently, our winter wheat is playing that waiting game on determining if the last couple of weeks of sub-zero weather actually has caused any winter kill out there. And that's one of those things you don't know until we start to come out of dormancy. And sometimes it's almost harvest time before we really know. But we are hearing results back from people going out, doing some crop tours, looking at this wheat. They say overall they've sold some pretty good looking crowns out there on the wheat, but they have only seen burnt back leaves as the only real damage. But it's going to take a little bit more time before we know anything. And honestly, I'm surprised that we have not heard more talk in the market about the possibility of winter kill, considering the fact that that first week of cold weather snap, we actually didn't have very much snow cover then. And these are the coldest weather we have seen in a long, long time. Now, one thing to keep in mind about all this wheat, especially the winter wheat, is at May time frame is a time that the weather can affect the filling of the wheat heads. And that also is a time we sometimes see price direction up or down. Now, the spring wheat people, they're going to see something a little different this year. They're going to have some opportunity to decide what they really want to plant. And we might see some of that spring wheat go to corn and soybeans due to the prices out there. But all this wheat, Greg, has good potential. It's continuing to go up. It's continuing to trade at levels we have not seen in a long time. It's very unusual to see everything so strong to the upside, whether it's wheat, corn, soybeans, or milo, and you can even throw cotton in there.
One question about exports too. You know, one of the terms we haven't heard, even with as high of the prices on the commodities that we've had, and correct me if I'm wrong on this, time, you haven't heard a lot of the U.S. has been priced out of the market because of the commodity price right now.
One thing that's helped us there, Greg, is our dollar index. Our dollar compared to other currencies has been lower. That helps us on our exports. So that's made a lot of difference out there. And the other big thing is, other than wheat, it's hard to find anybody else in the world that is nearly as good of a supplier and has nearly the supplies of corn that we do. Now, soybeans, the whole playing game is between North and South America, and it just switches as the calendar year switches out there too. But we have done really good on all of our exports out there because we do have the supplies. Only problem is our supplies are getting tighter.
By the way, this portion of the Alpha Ag Summit is sponsored by Grand River Welding Institute and also by Schultz Homes. You can learn more about our sponsors by going to our website at alphaagsummit.com. Tom Leffler with Leffler Commodities out of Augusta, Kansas, is joining us here on the market panel here at the Alpha Ag Summit. If you want more information or have any questions for Tom, you can give him a call, 866-GO-TO-TOM, 866-GO-TO-TOM. We have focused on the grain side. Let's go over to the livestock side now, Tom. And boy, where do you start? Coming off the year of the pandemic, through the meat packing plants shutting down, you had the harvesting of many hogs up in the northern plains just because they couldn't get them to the packing plant because they were closed. How do we see it? How did we see both of the cattle and the hog market, how they weathered 2020 and what we've seen here so far in this first 2 months of 2021?
Well, the hog market since the spring of 2020, when we put in our low, has been working its way higher all along. We're currently experiencing a whole slew of new contract ties, and it doesn't matter if we're talking old crop or new crop, kind of proving the fact that pigs can fly, because it looks like they just want to fly off the charts. The summer contracts, they're almost acting like they want to go up and try to test the $100 mark. So the hog market has really been doing good. Pork cuts have been slowly working their way higher price-wise. We've been seeing the cash hogs work their way higher too. We've also now seen several months of the cold storage report showing double-digit declines in the pork stocks versus a year ago. So there's a lot of things really looking good out there for the hog market. But just as soon as you start to feel comfortable, you got to be careful, because something can come along and pull this market right back down, and that could be China, Greg.
In what way, or what way would you look at that as far as trade, or we can't forget about African swine fever either?
That's right. And as far as trade, they have been very helpful in buying a lot of our U.S. pork. They've had to buy a lot of pork, not only from the U.S., but from other countries, because of that African swine fever just decimated their hog herd. But they're claiming now, by the middle part of this year, they could be back up to pre-African swine fever levels as far as their hog herd. Now, I want to caution everybody, this is my own personal opinion, I'm not real trustworthy of the Chinese. I don't believe everything they tell us. I don't know if they've got their hogs back that good. It's amazing they continue to buy a lot of pork from us, considering they are supposed to be getting back to such great levels in their hog. But we're also starting to hear rumors out there that they might be starting to have some disease problems again. So this China thing is not a complete done deal, but it is definitely the thing that could continue to help make this hog market, or it could break us down the road here too. And, a lot of this hog herd building we've seen was because they knew we had these great exports going to China out there. So that's been a big thing helping out this hog market for some time now, Greg.
We don't want to, I don't think any hog producer wants to relive like the late 90s when we were down below $10?
Exactly. I think we had a low of about $8 back then, and it was just a terrible situation. It put a lot of the small hog producers out of business, and a lot of the bigger ones got bigger after that. And we don't want to see something like that hit us too, because we see some kind of a disease, whether it's African swine fever or whatever, hit the U.S. and decimate our hog herds too.
Did the U.S. herd, just because of everything that had gone on, was there much rebuilding that needed to be done here in the U.S.?
Not really. We didn't really need to do that much. I don't think anybody still knows to this day how many hogs were slaughtered when we had the problems with the packing plants. I mean, I don't even think USDA's came up with a good number on that. We heard all kinds of wild numbers floating around out there, and I do think we lost a lot of hogs. But when you look at our inventory, we still have a large inventory despite all that taking place.
Let's move over to the cattle side. And by the way, we're talking with Tom Leffler of Leffler Commodities out of Augusta, Kansas. If you'd like more information, easy to do. You can give them a call at 866-GO-TO-TOM. And Tom, we've seen the higher grain prices, specifically looking at corn. Throughout this time period when we've seen this rally, how has the cattle market responded to it?
I would put it this way: it's responded about as well as it could, Greg. It doesn't get a whole lot of choice. It has caused our cost of gain in our feed yards now, where they're playing on either side of $1. So we've been seeing this cost of gain go up tremendously. We don't have cheap corn anymore. We don't have cheap meal. We don't have cheap DDGs. I mean, everything's went up in price, and that just makes it that much tougher for these feed yards or anyone feeding cattle right now to make money. The current levels, we're adding up to negative returns for most of the cattlemen out there. And keep in mind, all that cheap corn that we had earlier and cheap wheat, it's all been fed up. And some yards are kind of going mouth to mouth on keeping their supplies, hoping for a break, and they can buy supplies cheaper. But that just has not occurred, Greg, as we continue to see these prices hold up. And you know what's going to happen? They just get passed along and feeding these cattle out. Now, a big concern we got right now is the live cattle futures. How they're running so far ahead of the cash market and they're running ahead of the fundamentals out there. We have seen the April live cattle, which are going to be our front month now. They have seen a positive gain over the cash market by as much as $9 to $10, way out of line with historical basis out there. But we have seen poor basis levels for the last several months out there. Now, some of this is getting tied to increased managed money that's flowing into our cattle futures now. We had not seen a lot of managed money here several months back. It's starting to flow in. They are buyers, and they are pushing this market up. And they have also pushed it down a little bit too. But they are helping support this market, and it's supporting it much more than what we're seeing out there in the cash sector.
I'm going to preface this next question that includes weather because of the February cold snap. But have we kept current as far as not backing stuff up in the pipeline?
Yes, I think we've stayed fairly current. We've seen some of this lately strength in our box beef prices come from some spot buying. And we did have some, times there a week ago where we were seeing packing plants not be able to kill the normal amount of cattle. Some of them weren't even able to kill it all. Trucks weren't able to deliver beef, and areas that needed the beef and they could get it there, they raised the price on them. That's had a lot to do with what's going on with the box beef. But that cold weather did play into the markets a little bit. But I'm worried that we are getting closer to seeing this box beef price start its decline back to the downside. What worries me about that is, will that also cause the packers to be less aggressive out in the feed yards, which I shouldn't say the word less aggressive. They haven't been aggressive at all for the last few weeks. I'm afraid we're going to start seeing lower bids possibly down the road here.
What about average weights? Two-part question. Obviously, we're going to have to look at this up until we had this big Arctic cold snap that took place. But what are we seeing with average weights? How have they been doing?
Well, Greg, you got to keep one thing in mind. Our weights that we see come out, the actual weights, they come out every Thursday morning, and they have a 2-week delay in the numbers. So we have not really seen the numbers that reflect what has happened the last couple of weeks as far as the sub-zero weather out there. But up till then, our weights have been holding awful high. They've been holding well above year-ago levels, and steer and heifer weights have not been that far off of their record highs too, Greg. So as bad as it was to see these cattle not performing well in the feed yard because of this cold weather, we saw, weights drop out there. That will be a little bit of help to the market by seeing these carcass weights drop down, because that means a little less beef production. But, we won't see those numbers for a little while here, but I do expect we're going to start seeing those carcass weights come down. But they have been holding up very strong, which just meant that much more beef production out there. It's surprising we have done as well as we have with the amount of beef production we've had. But it's kind of like the hog market. We've been really fortunate to see the amount of beef that we've been able to export. Once again, the lower dollars helped us out there too.
And this goes back several years ago. You talked about the supply that we've been, the cattle guys out there, they've been slowly building their herds back up as well because of what we saw 3, 4, 5 years ago, where they had to, unfortunately, pare down what they had before.
Yes, we're starting to see the cattle herds build their way back up. It's going to be interesting to see if we see any effect as far as what's took place here lately, as far as maybe seeing a lot more open cows go to slaughter because they lost calves during this last couple of weeks of this cold snap. This weather might have made some changes out there. We've also seen some changes in some of our cattle because of the drought we've experienced this summer in the southwest part of the country too. But we are starting to see these numbers build back up, which in one aspect, it's not just the total cattle inventory, but you look at our feed yards. You know, we saw the last report, we've got over 12 million head of cattle on feed, Greg. That's the second largest that we have had in the history of the cattle on feed reports. And we somehow have managed to ignore that and not let it crash the market. But there's a lot of cattle out there that still have to be ran through the processing. And if we see some more higher placements out there, that's just going to add more to it.
Somewhere, though, we're going to hit the proverbial wall on that, one would think.
You know, Greg, that's been the adage we've heard for years about the wall of cattle coming, and the fact that, you know, we're also going to see all of a sudden that we're going to see that wall collapse. You know what? That wall hardly ever seems to get here. It seems like something always happens that changes the perspective of everything.
It seems to move, whether we know it or not. Yeah, exactly. Tom Leffler of Leffler Commodities out of Augusta, Kansas, is our marketing panel guest here on the Alpha Ag Summit. You know, we've talked about weather throughout all this. It was amazing to see the effect that this Arctic air had, and snow, because literally it was from the U.S.-Canadian border, you know, Minnesota, North Dakota, almost straight down to the U.S.-Mexico border. We never, ever talk about how much of an effect that has, but you know, literally when the whole state of Texas has snow on the ground, you know how intense this storm was.
That's exactly right, Greg. And talking to clients and other producers, whether they was in Nebraska, Kansas, Oklahoma, Texas, some of these stories were horror stories. I mean, everything from seeing cattle that drop 75 pounds in a short amount of time, to having trouble feeding cattle, to having trouble getting their feedstuffs they needed, to having trouble keeping cattle healthy, having trouble keeping waters going, and also with the rolling blackouts. That also messed things up too. It was a really terrible time, and I don't think we've even came close to assessing how much dollar damage it has done just to the livestock industry, let alone other parts of the ag sector.
Couple of things as we start to wrap up our panel here. You know, one of the things we have seen here throughout the start of 2021, and I think people are starting to notice it more, and this goes into input cost, not only concerning natural gas, which of course has come to the forefront because of what we've seen with the Arctic outbreak, the rolling blackouts and everything else, but the price of gasoline is starting to rise as well.
Most definitely so. The price of a lot of things doing with petroleum is starting to go up. Now, I saw a number, and I can't remember it off the top of my head, just came out this afternoon. It showed we've seen quite an increase here in just the last week or two on gasoline. And we're not talking about natural gas, gasoline. That's had a lot to do with the price of gas going up. But as you said, Greg, our input costs are going up. And that's one thing our producers need to do. Sharpen those pencils up. Figure out exactly what your inputs are, because there's no doubt inputs are going to go up. I don't believe in, you know, theories that this takes place all the time, because when high grain prices take place, inputs go up, but they usually seem to follow each other, because it seems like if the farmer has the ability to pay more, they're going to find a reason to make them pay more. And it's not only the prices are going up, some of this is hard to get your hands on, whether it's equipment or some of the fertilizers. It's a tough situation ahead of us that we better be prepared for. And the one other thing I always tell people about input cost is a lot of guys get things locked in early. Well, you've got your inputs pretty much locked in. You've got a very good idea what your break even is going to be on that crop. The biggest variable you got still, what the yield's going to be. If you've got that many of your inputs locked in, you need to start pricing some of that grain. That assures you some profitability. And it also makes your lender happier too.
Well, and let's admit it, and I think farmers need to, if they haven't already, they need to. Having the direct payments from the government last year was a big help to many farmers' bottom line.
You've got that exactly right, Greg. They had two things working for them last year. A lot of government payments, some of the biggest we've seen in a long time. And then on top of that, the end of the year, very high prices. You put those two together, you had some guys that got into tax problems.
Tom Leffler with Leffler Commodities out of Augusta, Kansas is joining us. And as we've been talking about input cost, and we just mentioned a few input costs. You've got the situation with the tariffs on phosphate coming into the U.S., and as you said, fertilizer prices, we don't know what they're going to be. Chances are they're going to go this way, and that's just one thing that we've talked about. We haven't mentioned diesel prices or anything else that we've seen.
That's right, Greg. And I think you need to be starting to talk to your suppliers if you don't have everything figured out and locked in, because everybody we're talking to is seeing price increases coming down the road and some problems of getting some of the stuff you need. So you need to start getting prepared for that, because you don't want to be caught when you need it and you can't get it, or when you need it, it costs a lot more than you was planning on.
Throughout all this and saying all this, does the two words risk management become bigger and bigger factors?
It's a huge factor, Greg, and I think it's something that we're seeing more and more producers start to realize, because we're operating with such much larger dollars out there, more acreage, more bushels, that without risk management, you're just trying to fly blind. And that has nothing to do when we're talking about the numbers that we're operating with today. And you've got to have some risk management, or you might not find yourself in business down the road despite high prices.
And if there's a client that you have, or any farmer in North Dakota, South Dakota, Minnesota, Iowa, Nebraska, Missouri, Texas, it doesn't matter where, it's the importance of having that plan ready, looking at risk management, talking to your financial planner. We could go on, but in a year like this, what we've seen, for the good, for what the commodity prices are, but there's that other side that they need to keep squarely in mind.
That's right. And another thing they find quite often, by having somebody to work with, they have another opinion, or somebody else that can agree with them or disagree with them. Quite honestly, I find a lot of time our producers have good plans, good ideas, but they sometimes don't have the confidence to pull the trigger. And if they got somebody who will talk it through with them to make sure they understand they're looking at the right thing, it makes it easier for them to pull the trigger. Sometimes that is not the easiest decision to make on your own.
Well, it's a good thing then that there's no farmers out there that are stubborn whatsoever.
Oh, no, none at all. Never met one, Greg.
All right. Hey, Tom, I appreciate having this discussion. This was a nice way to be able to talk about the markets, to be able to talk about everything that's going on. Important times right now, and hopefully profitable times for farmers and ranchers.
Yes, and we've got a lot of things ahead of us. Don't take for granted. Be prepared. Markets never stay on the highs forever, Greg. They always come back down eventually.
Well, this will do it for our market panel discussion here on the Alpha Ag Summit. We would like to thank Tom Leffler with Leffler Commodities in Augusta, Kansas, for joining us. The Alpha Ag Network, along with our sponsors, are proud to bring you this Ag Summit. A special thanks to our presenting sponsor, Hitchpin.com. The views and opinions expressed on today's panel are not those of Alpha Media and do not represent the viewpoints of Alpha Ag Network stations, their farm directors, or management. This broadcast is protected by copyright law, and credit should be given whenever sharing or reposting of this video. Alpha Ag Network is local farm programming, promoting, respecting, and celebrating the industry that drives our community's agriculture. Our producer has been Shayla Reilinger, along with my other colleagues of the Alpha Ag Network. I'm Greg Akagi. Thank you for watching this portion of the Alpha Ag Summit, and stay tuned. We're going to be talking trade in our next Ag panel.